What's up everybody? Welcome back to the channel. Today we're diving into the top 3 trading strategies for 2025 that can help you maximize your profits. The market is always changing, so I've done the research to find what's actually going to work this year. Trading isn't a get-rich-quick scheme. It takes discipline, research, and a solid plan. Whether you're a beginner or a seasoned trader, these strategies are backed by data and expert insights. And to make it fun, we'll use claymation to visualize these concepts so you can see them in action. Let's jump into the first strategy that could seriously change the way you trade in 2025. First up is trend following, a classic for a reason. This strategy has stood the test of time, used by legendary traders for decades, and it's still just as relevant in today's fast-moving markets. The idea is simple: spot the market's direction and ride the wave. Instead of trying to outsmart the market or guess where it will turn, you simply go with the flow, letting momentum guide your trades. You're not predicting tops or bottoms, just reacting to momentum. This means you don't need to be the first in or the last out. You just need to catch the meat of the move. Tools like the 50-day and 200-day moving averages help you spot trends. These lines smooth out the noise and show you the bigger picture, making it easier to see when a new trend is forming or ending. When the 50-day crosses above the 200-day, a golden cross, that's your buy signal. It's a sign that momentum is shifting upward, and it's time to get on board. When it crosses below, a death cross, that's your cue to exit. This helps you avoid holding on to losing positions and keeps your risk in check. Trend following is mechanical. Set your rules, stick to them, and let the market do the work. There's no need for guesswork or gut feelings, just follow your system. Imagine our clay trader. He buys when the yellow line crosses the blue, rides the trend as long as it lasts, and exits when the trend reverses. It's a disciplined, repeatable process. The key is discipline and patience. Ignore the noise, wait for clear signals, and use a trailing stop loss to protect profits. This way, you lock in gains as the trend continues, but you're also ready to exit if things turn. In 2025, with new trends in AI, energy, and biotech, this strategy helps you catch the big moves without needing to be an expert in every sector. You don't have to know every detail about these industries. Just follow the price action and let the trends reveal themselves. Remember, you'll have small losses, but the big wins make up for them. The goal isn't to be right every time, but to make sure your winners are much bigger than your losers. Trend following is about letting your winners run and cutting losses quickly. This way, you avoid the trap of holding on to losers and missing out on the next big trend. Master this, and you'll be ready to ride the waves of the modern market. Whether the market is calm or wild, trend following gives you a reliable way to participate in the biggest moves. Let's move to the next strategy and see how you can add even more tools to your trading arsenal. Next up is swing trading, the perfect strategy for those who crave market action, but don't want to be glued to their screens from opening bell to closing chime. If you have a busy schedule or a full-time job, swing trading lets you participate in the market without sacrificing your day-to-day life. Swing traders aim to capture short-term price moves, holding positions for several days or even a few weeks, long enough to catch a meaningful move, but short enough to avoid getting stuck in a rut. It's ideal for part-timers. You can do your research after hours, set your trades in advance, and just check in briefly each day to monitor your positions. The main goal? Spot stocks that are about to make a move, jump in before the swing happens, and exit with a tidy profit once the momentum fades. Swing traders rely on technical patterns like flags, pennants, and breakouts. When a stock consolidates after a sharp move, they're ready to buy the breakout and ride the next wave. Support and resistance levels are crucial. Buying near support means you're entering at a price floor, while selling near resistance lets you lock in gains before the price hits a ceiling. Always plan your entry, target, and stop loss before you trade. Discipline is everything. This planning helps you avoid emotional decisions and stick to your strategy, even when the market gets wild. In volatile markets, swing trading can really shine. You can profit from both upswings and downswings, taking advantage of the market's natural ebb and flow. Picture our clay trader. He buys when the price bounces off the clay floor, sells near the clay ceiling and repeats the process, building profits over time. This strategy offers the potential for great returns, but without the constant stress and pressure of day trading. You can relax, knowing your trades are working for you in the background. Swing trading is about being nimble, having a repeatable process, and sticking to your plan. Consistency and patience are your best friends here. If you want flexibility, a steady stream of opportunities and the ability to trade around your life, not the other way around, swing trading could be your perfect fit. Do your homework, set your rules, and let the market come to you. Patience and preparation are what set successful swing traders apart. Ready to take your trading to the next level? Let's talk about algorithmic trading and how it's shaping the future of the markets. Here's how technology is changing the game for traders everywhere. The third strategy is algorithmic trading, using computers to execute trades based on your rules. This approach is revolutionizing the way people participate in the markets, making it possible to automate complex strategies that once required constant attention and quick reflexes. It's not just for Wall Street anymore. Anyone with a computer and an idea can use or even build trading algorithms. The barriers to entry have dropped dramatically, opening up a world of opportunity for individual traders and investors. Computers have huge advantages: no emotions, no fatigue, and lightning-fast execution. They don't get tired, distracted, or make impulsive decisions. This means your strategy is executed exactly as planned, every single time, no matter what's happening in the market. Start by turning your strategy, whether it's trend following, swing trading, or something unique, into clear, programmable rules. Think about the specific conditions for buying and selling and how you want your algorithm to react to different market scenarios. Backtest your algorithm on historical data to see how it would have performed in the past. This step is crucial for understanding the strengths and weaknesses of your approach before risking real money. AI and machine learning are taking this to the next level, analyzing news, social media, and market data for hidden patterns. These advanced systems can spot trends and signals that humans might miss, giving you a potential edge in a crowded market. You don't need to be a coder. Many platforms now offer drag-and-drop tools to build your own bot. With just a few clicks, you can set up rules, test strategies, and launch your algorithm, all without writing a single line of code. But remember, a bad strategy, even when automated, will just lose money faster. Automation amplifies both your strengths and your mistakes, so it's vital to test thoroughly and stay vigilant. Monitor and adjust your algorithm as markets change. The financial world is always evolving, and your strategy needs to adapt to new conditions, news events, and unexpected volatility. In 2025, understanding algorithmic trading gives you a real edge in a tech-driven market. Those who can harness technology will be better positioned to spot opportunities and manage risks. It's about making smarter, faster, and more disciplined decisions, removing the guesswork and emotion from your trades. Embrace the shift from emotional trading to data-driven strategies. Let data and logic guide your moves, not fear or greed. Now let's wrap up with your next steps. The future is algorithmic, and it's yours to shape. There you have it, the top 3 trading strategies for 2025. Trend following, swing trading, and algorithmic trading. Each has its strengths, so pick one that fits your style and master it. Which strategy are you most excited to try? Let me know in the comments. If you have questions, drop them below. I love hearing from you. If you found value here, hit like and subscribe for more. Thanks for watching, and best of luck on your trading journey. See you in the next video.